Okay, guys, so we will start now. Let the other people join mid. We have already waited for a few minutes. Okay, so guys, we are going to discuss today regarding the investing. Why I chose this topic to start my first webinar, because investing is a kind of education which are not provided generally in India, especially in our school and colleges. I believe actually that there are many people who struggle with their personal finance, as they don't have much access to the knowledge regarding the investing. So I thought to why don't I utilize why don't I use my learnings to share with others and help them to get benefited, to start, at least start their investing journey. Eventually they will learn and become expert in that. Okay. Guys, moving forward, let me tell you first what are the topic that we are going to cover in this webinar. Guys, the first topic that we are going to cover today is the importance of investing. Then we will cover what we need to ensure before starting the investing. What are all the things that we need to do before starting investing? Okay, and then we will talk about what is the right time to start investing, at what ways we need to start investing, in what condition we need to start investing. Okay, and then at the last we will discuss some tools of investment. Okay, so moving forward, guys, let's first discuss regarding the importance of investing. Guys, if you have a money, then you have the two options. Either you can protect that money or you can grow that money. Okay. So basically, when you are at the age when you can take some risk, then your thought process should be to take some risk to grow your money. Okay. But if you are at the very latter stage, like if you are in your late 50s or 60s, then it is better to have a thought of protecting your money rather than making it to grow. Okay. Guys, when we have a thought to grow our money, basically what we are doing is that we are trying to create a passive source of income through investing. Okay. Basically, guys, we go to our works to earn money, but investing is a method by which we can earn money without working for it. Basically, money work for us. Okay. The second reason why we need to invest is that guys, in India, there is inflation of around 5.5% that has been projected by the RBI for the next financial year, that is of the ongoing financial year 21-22. During the last year, basically in 2020, as per the World Bank data, inflation rate was 6.6%. And you can imagine, guys, that when you save your money in a saving account, you hardly earn interest of around 3 to 4%, which is even less than the inflation rate of India. Okay, so what is happening when you are saving your money in your saving account? They are basically not growing day by day, but basically they are decreasing day by day in terms of the strength of your money of purchasing goods. Okay, so investing helps you to overcome the inflation. If you are able to if you are able to generate an interest of more than inflation, then basically your money is growing rather than it's decreasing with the time. Okay. The last the last reason of importance of investing is that guys, to create wealth. When you invest a small amount over a period of the time, it's accumulate to have a to generate a good wealth actually. Like guys, even if I take a small amount, like if I am able to save 5,000 per month, and if I am regularly investing around 5,000 per month, after 25 years or 30 years, it is going to grow more than 1 crore, guys. Okay, which is even if we will consider the average rate that we are earning from my investing as a 12%. Okay. This is basically called the compound effect. Okay, compound effect is nothing, but it is a compounded rate that are getting eventually to your principal amount that you are investing month by month. Okay, so this is a method by which you can create a wealth over a period of the time. So these are the few importance of investing, guys. So moving forward, we will discuss regarding what we need to ensure before starting investing. Okay, guys, there are the many people who does a lot of mistake before starting the investing. Sometimes the people go and take directly loan to start the investing. Okay, or sometimes even people think that okay, this is just about investing, I will start investing after some period. Why so much hurry? Okay, so guys, what we need to ensure before starting investing, that we will discuss one by one. uh, I have figured out the four things that we need to ensure before starting investing. Firstly, to have an emergency fund, guys. We cannot invest our entire saving directly to a stock or in the mutual fund or whatever it is you like to invest, because in case of emergency, you need an immediate cash. You cannot withdraw immediately your investing amount due to many reasons, type of investment you are doing and some other reason. In that case, you need an emergency fund, guys. So what I have figured out with my analysis or my experience from the last 4 years, that we should have an approximately 6 months of an expense as a as an emergency fund, and we can save that emergency fund in either in our saving account or in our fixed deposit, from where we can directly liquidate cash immediately. Okay. Second thing, what we need to ensure before starting investing is to have a health insurance, guys. Why I'm focusing on having a health insurance before starting investing, guys, because in case of medical emergency, everyone is aware that the kind of expense that having on the medical expense. In case of emergency, your entire saving can flow like a water, and even still is not enough to get the right treatment. That is where the health insurance comes into the picture, guys. And we are not sure what is going to happen to anyone or to my family or to anyone in the next day. Nobody is sure about that. So for that reason, I would highly recommend to have an health insurance first before even thinking about going for the investment, guys. I even have a health insurance for me and my family before I have started investing. So the next thing, what I have figured out, to have a term insurance before starting investing. Why I am asking about the term insurance? Because I do not know what is going to happen with me tomorrow. Maybe I face some accident or some death may happen. I don't know. With the God's sake. So in that case, a term insurance will help my family to have at least some financial safety. Okay. So guys, if you have a family liability on you, then it's better to have a term insurance. I'm not asking here to go and buy any random insurance like LIC policy or something like that. Only term insurance which cover all your risks. Okay. It will protect your entire family. Then the fourth thing which I have figured out, that many people go for investing just because many people are investing in a particular tools, and that is nothing but a FOMO, fear of missing out. If I will not invest, I will miss something. Okay. In that case, many people go for investing without even knowing about the tools, what is that particular tools about, and anything about, and they just go and put their hard-earned money into the tools, and they lost money. That is really painful, guys. So you should have at least a basic knowledge about the tools which you are going to invest in. I'm not saying you become an expert in a particular tool and then start investing in that tools. Okay. So have a basic information about the tool, and then you start with a small amount. Eventually, you will have an expertise in that particular tools, and then you can increase your investing amount from time after time. Okay. So this is the right way of starting the investing, guys. Okay. So the next thing that we are going to discuss is what is the right time to start investing, guys. At what age you need to start investing? I would say start as early as possible. Okay, because early you start, more you have time for the compounding, more you have the time for your money to grow as a wealth. Okay, like if I take some example, guys. Suppose if I am investing 5,000 per month, at the rate and I am earning 12% as a interest rate on my investing, then after 20 years it will becomes approximately 50 lakhs. However, if I invest the same amount for the next 30 years, it is going to around 1.76 crore. That is almost the triple than the 50 lakhs guy. So if you are starting the investing just after 10 years, if you are delaying your investing journey, that if you are at the 25, you are thinking that I will start investing at the 35, you are going to lose a lot of amount. Okay, so that is the beauty of compounding, guys. That's why I recommend people to start investing as early as possible. However, we should avoid two mistakes in the race of starting investing early. Okay, firstly, what the people do is they go and take a loan from the bank, they put it in the stock market or some other tools of investment, and they think that they will grow, they will earn a lot of interest on it and they will pay back to the bank. That doesn't happen, guys. This is not a right way for starting investing. I would rather recommend to clear all your debt before starting investing, because debt reduces your investing power. Okay, so these are the two things that we should avoid. We should not go to take any loan to start, and we need to clear all our debt first. Okay, there is some kind of the loan which you are even have to take after starting the investing. Like if you have to buy a house, it may be possible that that you cannot have enough cash to go and buy a directly house. You have to take a loan. That's a different thing. That's a long loan, and that is going to happen. That you can plan. You can budget your income, and accordingly you can take a loan side by side of investing. That's another thing. Okay, best way to start investing is to start doing your busting, guys. There are the many excuses of the people that I don't have the money. How can I start investing? Come on, guys. Do a busting. You will find out where your money is going ahead. Okay. Cut down your expenses. Start with even 1,000 rupees or 500 rupees. You can start an SIP even for a 500 rupees in a mutual fund. This over a period of time is going to save a lot of money for you. Okay. So this is the best way to start investing. For the student, I would say if there is a student who want to start investing, they can start with a very small amount from the pocket expenses. But I would not recommend them to compromise with the expenses on the education, because what I believe that investing in learning is the best investment. It's provide a return in many fold actually. The best way of investing is to invest on the learning apps. Okay, so moving forward, the next thing that we are going to discuss about some tools of investing, guys. Okay, there are the 5 tools that we are going to discuss in our today's call. First is the mutual fund, second is stock and equity, third is gold, fourth is corporate bond, and fifth is the cryptocurrency. Basically, my focus would be on what tools is suitable for what kind of person actually. Okay, so the firstly I will discuss regarding the mutual funds. Guys, mutual fund is nothing but a portfolio of stocks managed by some fund managers. So what I mean by portfolio of stock is that a fund manager has created a fund of more than even hundreds of stocks. Okay, so you cannot even buy the one stock of each stock of a particular fund. So what fund manager do is that they sell the unit of their funds. Okay, for even a small amount like 200, 300, and 500 for one unit. Okay, so you can start an SIP for a very small amount. Guys, if you are a salaried person and if you do not have the time to do some R&D where you need to invest, you can simply go and start an SIP with whatever amount you can invest, guys. Okay, that is called the systematic investment plan. While buying any mutual fund, 2 things that you need to ensure. Firstly, check the expense ratio, and secondly, check the exit rate. So what is expense ratio, guys? In order to maintain a fund manager have to invest certain money. To manage a particular fund, they need to keep researching on every stock, which one is going and which one to buy, which one to sell. So they need to hire a lot of people to manage the stock. So they have certain expenses. So from where they will get that expenses, guys? From you, from investor only. So they cut some expense ratio from the your earnings. Okay. So the expense ratio should be less than 0.5% of a mutual fund. It doesn't mean that a mutual fund have the 0.5% of expense. It's a great mutual fund. No, there are the many great mutual fund who have even less than 0.1% of the expense ratio. It is just an average. Means what I meant to say, if our expense is more than 0.5%, no way. That I would not recommend to go for it. Okay. And I don't believe that you should pay any exit load. So what is exit load, guys? Exit load is the amount that you pay to the fund manager when you are withdrawing your investment. Okay. Like if you are investing for the from the last 3 or 4 years, and now you want to withdraw your funds from the particular mutual fund, then they will deduct some money. Okay, that is called the exit load, guys. Okay, there are not all mutual fund that charges for the exit load, but there are the many mutual fund who charges for the exit load. So I don't think that we need to pay any kind of the exit load. We do not go for such kind of mutual fund. So I would recommend to choose a mutual fund which have the exit load 0. Okay. The next tool that we are going to discuss is stock and liquidity, guys. This is my favorite one. I invest aggressively in the stock, and just for the information, I have not started investing even in the mutual fund right now, because I don't feel investing in the mutual fund because I want to see where my money is going. When investing in a mutual fund, I do not know where my money is going to be invested, which is completely controlled by my fund manager. I don't want to invest like that, but it doesn't mean it's a bad tool. It's a great tool for a systematic investor. Okay. So this is my favorite one, guys. So in order to invest in any stock and equity, the first most essential thing required is a demat account, guys. So what is a demat account? It's a kind of account from where you can purchase and sell shares from the share market. Okay, or stock from a share market. Okay, so whatever share you buy, every share get parked in your demat account, and from the same account you can sell those stock back to the share market. There are the many stock brokers from where you can get your demat account, like Zerodha, Sharekhan. There are the many others also. Okay, you can choose the better one for yourself. I myself uses Zerodha. Okay, it is India's one of the best platform, I would say. Okay. So basically, guys, in India, there are the two exchanges on which the stock trading happen. Firstly is the NSE, that is the National Stock Exchange, and the second is the Bombay Stock Exchange, that is BSE. Okay, on these two exchange, the company are listed for selling their shares. Okay, it is little of the, I would say, it is little the higher risk than the mutual fund, because you have to do all the research. If you are putting your money in a particular stock, you have to ensure all the research about that particular company, whether it's going to grow or every fundamentals, what is their financial trends going with the last few years, or what is their business plan for the future. So all the kind of research you have to do by yourself if you are buying investing directly in the stock. Okay. Basically, there are the many methods of investing in the stock, guys. But here we will discuss only two methods. Firstly, intraday trading. Secondly, the value investing. So what is intraday trading, guys? Intraday trading basically is a kind of trading in which we buy a stock on a particular date and sell those stock back to the share market on the same trading day. Like if I am today purchasing a 5 share of Reliance and then I'm selling back after 2 hours or 3 hours again back to the share market, it's a kind of intraday trading. That particular period, I may have a losses, I may have a gain. So whatever I earn is my profit. Okay, that is called the intraday trading. Guys, this is a it's contain a high risk, so I do not recommend it for a beginners. Okay, so the best way for the beginner is to they have a value investing. So what is value investing, guys? In value investing, basically, we do a research about a particular company, and we invest in a particular company. Like if we believe that its fundamental is right and it's going to go in the future. So if I have a stock, if I buy a stock, five stock of Reliance today, and I feel that Reliance is going to grow in the next 5 or 10 years, so I will purchase it and will keep it for the next 5, 10 years or whatever period I want. Okay, and once the company will grow, the stock value will also grow, and accordingly your money will grow with the stock price. Okay, so this is called the value investing. So these are the two methods of investing in the stock which we are going to discuss here. Okay. So the next tool that we are going to discuss is gold. Guys, gold is one of the most fantastic tool, I would say. Why I'm saying it's a fantastic tool, because it is one of the oldest mode of investing, guys, and still working effectively. Okay. And even the wealth of a country is based on the gold reserve of the country. Okay. So the wealth of the India is decided based on the how much gold reserve India have. Okay. So that's why I feel that gold is a fantastic mode of investment. I do have an investment in the gold also. But when I say to invest in a gold, I don't mean to go and buy a physical gold and keep it in the locker and then you will sell after the price is like. That's not, guys. Let's invest in the price of a gold. Okay. The best way to start investing in the gold is to buy a sovereign gold bond. So what is sovereign gold bond? Is basically, these are the kind of the gold bond that are sold by the commercial banks. Okay. You can buy the bond from the commercial banks. There are the many commercial banks, the GFC and others. Okay. From where you can go and buy the sovereign gold bonds, guys. Other good way of investing in the gold is to buy in the gold ETFs. This can be traded on the stock market itself, on the National Stock Exchange and the BSE. Okay, from there you can invest in the gold ETFs, and then there are the many mutual fund who are investing in the gold mining company, guys. Okay, so you can buy those mutual fund as well. So these are the basically the three method I would recommend to invest in the gold. Basically, I'm investing in the gold ETFs. Okay, I directly buy the gold ETFs from the stock market. Okay, so the next tool that is wow, the next tool is the corporate bond. Guys, this is the most interesting tool, I would say, for the person who do not want to take huge risk but want a huge interest on their investing, guys. Okay, so what is a corporate bond? Guys, companies generally raises the fund in a many ways. When the stock market is a way of raising the fund for the company, corporate bond is also a type of way of raising the funds. So what the company do is that they sell the debt security directly to the people. Okay. So if I will buy some debt security of a company, okay, so what they will do is that they will keep my money for a particular period of the time. There would be a lock-in period, okay, and then they will promise us a fixed rate of return that may goes around 9 to 11%, guys. Okay, that's a very huge amount actually. Okay, and that's why a huge rate actually. Okay, and that's why I say that it is one of the most fantastic tool for the person who not want to take risk, want to have a fixed rate of return. Okay. So moving ahead, the last tool that we are going to discuss is the cryptocurrency, guys. Okay. This is the most discussed tools in nowadays. Everywhere people are talking about the cryptocurrency and cryptocurrency. Okay. So let's understand what the cryptocurrency is. Okay. Basically, it's a kind of digital currency, I would say, that works on the cryptography and blockchain. So what I mean to say about digital currency that when we have 100 rupees notes, guys, RBI, there is a sign of RBI government that they are issuing us a 100 rupees Indian currency. Okay, this is also like the same, guys. Okay, it is in the digital form. But it is, what it's a decentralized tool, guys. Okay, it is not controlled by any central authority or controlled by any central bank. So what how it function is that it functions on the peer-to-peer networks, and everyone can receive the fund and to sell the funds without having any third-party liability, guys. Okay, any third-party intervention. Like if we exchange the money, there is a third party involved, that is a bank. If I have to transfer some money from my account to your account, there is an intermediate of the banks. Okay, but in this case there is nothing like intermediacy. Okay, guys, there is a debate on it also, whether it's legal or illegal in India. Government has not confirmed yet, so we can consider it legal until unless government gives some confirmation. Okay, but it's I would say it's a very high risk tools. So if a person is willing to take a very high risk, then they can go and invest in the cryptocurrency as well. Okay, so with this, we are in with the today's discussion, guys. So this is my uh, entire everything regarding my digital presence. So basically, there is a website link. You can join my Telegram community, guys. Okay, there is a YouTube channel I have also started recently. Okay, so you can go and check out there. You can subscribe the YouTube channel as well. I'm sharing you the link of everything. I will share everything, my WhatsApp community and everything on your mail as well. So from there you can join my community. Okay, guys, there you will be getting all the kind of, you can ask any kind of query related to your investing journey. I would be actively present in those community. So there would be active presence of mine. So I would be trying to help you as much as possible. You can also write me back to my Gmail account. Okay. So with this, we come to the end of this webinar. Thank you for joining, and bye bye.
Thank you.